Hey guys, so on this video, I'm going to cover three things. Number one, why is it that INR or Indian rupee is falling aggressively? Now, usually in the past, it used to fall by 3.5% per year. But this year, the fall of INR has been roughly 6%. Now, this is very steep fall. Why is it that the case? Number 2 point, what impact is this going to have on you? Number 3 point, is there something that you can do in 2026 that can help you mitigate the bad side of the INR fall? So these 3 points I will cover. I will really encourage you to watch this video till the very end, especially if you want to learn more economics, finance, investing. So I cover all these complicated topics in very simple, easy to understand, teaching oriented format on my channel. Okay, so follow along and please watch the video till the very end. I am confident that you will learn something very interesting. So let's begin and let's try to answer question number 1 as to why is it that INR is falling and why did it fall so aggressively this year. Okay, so let me set up a simple equation framework because people have a lot of opinions and then they get into politics that this ye bhi to hota tha Congress time mein and all this stuff. No, I'm not interested in that. I'm just helping you understand simple economics. Okay, so economics says that this is your supply demand curve, right? So this is supply, this is demand, and basically this curve in economics pretty much tells you that what the price of an asset is. Okay, so wherever supply and demand intersect, so this is the intersection point, and this P1 becomes the price of that asset or value of that asset in the market. Let me help you understand by using a specific example. So for example, let's say that if you're talking about, let's say, a water bottle, or we are trying to identify the price of water bottle. So if the supply of water bottle is 1000 quantity and demand of water bottle is 100, so only 100 people are demanding it, then what becomes the price point? Well, it's supply over demand. So it becomes 10 units or whatever. So this intersection point P1 is the price. Okay, now you can replace that water bottle with INR, right? And set up the equation that, see, whenever the supply of INR goes up dramatically compared to the demand of INR, that supply is going up by 2x compared to demand, then what will happen? Well, the supply curve will shift rightwards, okay, and the value or price of INR will fall. Okay. Similarly, if the demand of INR goes up in context of its supply, then what happens? That demand is very high. Then the price of INR will go up. So this is the reason why currencies rise and fall. So then comes the natural second question that, okay, fine, then how do we put it in context of INR? See, basically the demand of INR or renminbi or Japanese yen or whatever, it is seen in context of other currencies, because here we are talking about something called as fiat currencies. Now there are different types of fiat currencies. For example, we have US dollar, we have INR, we have euros, yen, all these currencies. And typically the demand moves because the demand for some other currency goes up compared to other currencies. Okay, so a better question to ask, or a more refined question to ask when people say that, hey, why is it that INR is falling, is to see this as that, okay, demand for INR is falling in context of what? Well, it is falling in context of US dollars. So then comes a more investigative approach that, okay, then we write the question. So let me write this down, that why is it that the demand for INR is falling in context to US dollar? Right? Because now if you go back 6 months ago, Palki Sharma ne video nikale the, US dollar is about to collapse and khatam hi hone wala, US debt crisis, and every day like there is AL bubble bursting, every third day you had a bubble burst and whatnot. So that will make you feel that US dollar is collapsing. But on the flip side, if you just take a look, right, on a 1 year basis, INR is the one that is actually collapsing, not US dollar. Okay, so why is it that this is happening? So then you need to understand a little bit of macroeconomics. Let's see, you need to understand and ask a very basic question that, okay, why is it that the demand for US dollar goes up? Well, it goes up for a wide range of reasons. For example, if there is a crisis in the world, right? For example, Russia-Ukraine crisis will happen. Then emerging economies get hit first. Why? Because a lot of foreign investors who are investing in the Indian market or Chinese market or whichever market, those foreign investors are mostly Americans. They will get scared that, kal ko, if there is Russia-Ukraine crisis, maybe it will spill over to like some emerging economies in Eastern Europe. Then it's better we withdraw our money in whichever currency we were in Eastern Europe, Latvia, or whatever, and we take the money in US dollar and bring it home, right? So that is what they would do. So during crisis, US dollar finds lot more value compared to INR. So that could be one reason. Similarly, there can be a series of different reasons. So let me just quickly take you through 7 or 8 structural reasons why INR is falling structurally. That is the more important word, structurally. Okay, so let me explain it, and rather let me do a Q&A with you. Okay, so there are 6 or 7 key use cases of a currency, right? For example, if we study a currency from a trade point of view, right? If we consider, let's say, US dollar. Now, US dollar's dominance in world trade is roughly 60-65%. That almost all the world trade that happens in the world, majority of it happens in US dollar. Now, what is the meaning of world trade happening in US dollar? So let's pick a very simple example that, let's say, if India and China are trading with each other. So China sends, let's say, 100 pence to India, okay, and it says that, hey, every pen costs $1, so you have to pay me $100, okay. Now India will say that, you know what, 1 rupee or $1 is equal to 90 rupees now, so how about we pay you in INR? China will say, okay, I can take that money from you, but the issue in terms of trading with you here is that if you give me this $100 into 90, almost 9,000 rupees, what will I do with this INR? India will say that, okay, fine, how about I send you my wheat? Okay, you can pay me back in INR. So China will say, cool, works for me. But this equation goes for a toss if China is a net exporter of goods to India and India is a net importer of goods. So if we look at the trade equation, now given the fact that India is a net importer of good, okay, so net importer of good, this equation goes for a mismatch. So China, now it holds like 9,000 INR, right? What will it do with that, right? It can't buy like that much of Indian goods. So then China goes back to India and says that, you know what, India, just give me like in dollar terms, because then I can go and trade something with Russia, right? I can buy maybe Russian oil, right? So that might be useful for me, but Russia will not accept INR. Then I'll have to pay them in US dollar only. So this entire trade equation, one could say, set up in such a way that US dollar dominates, right? And unless India becomes a net exporter, the value of INR is likely to keep going down. So with the equation that I stated on the thumbnail, that 1 INR will become 100 rupees, and that is likely to happen. And one prime reason for that is trade setup. But then you will say that, okay, Akshat, this kind of makes sense, but even US is a net importer. It's not a net exporter. We can understand about China, that China is a net exporter, but US is still a net importer. Then what about that, right? So when your theory does not hold. Well, it holds, because if you actually analyze the asset market of the US, right? So asset market means that, for example, China, again, if we go back to that same example that I was telling you, that let's say US and China trade with each other. China sends like those 100 pence to the US, and US pays them $100. Now, let's say that that trade imbalance is there, that US is not really sending a lot of stuff to China or selling a lot of stuff to China. What will China do with this? US will say that, you know what, boss, what you can do is that you can start buying our stocks, right? You can buy Google, you can buy Amazon, you can buy Meta. All these are American companies listed on the American market. So with this $100, you can send it here and you can buy stocks. This is awesome for you. So this leads to a USD specific asset flow into the market, and it creates a use case of equity market for US dollar. Okay. Now, US's equity market is roughly 12-13 times that of India. So it's a huge market. It can absorb a lot. Chinese investors or China government even, right? I mean, let's assume that China government is buying like Google stocks. What would they look at before buying or deciding to invest in the equity market in the US? They will look at that, okay, can these companies grow? Will we be able to get our money back? All that stuff, okay? So this is the second key point, right? Which kind of nullifies that it's not just purely based on trade, but it's also about flow of asset. Now, if you look at India's equity market, now here we have had, you know, our finance minister also made the statement that, you know what, our market can be handled by DIIs only, FIIs jane do unhe, whatever, right? So then what ended up happening here, right? That our equity market has become DII oriented for the last several years, right? Now here also we are taking a hit. Here also we are taking a hit. What about debt market? Now debt market, I'll explain it by using this particular image. This is 1,000 rupee note. Now what is a note? If you zoom in and read, it says something like this: promise to pay the bearer the sum of 1,000 rupee. Now what did the Indian government do here, right? They outright banned it. There is no serious country in the world that has banned its own note, including the US, right? Why? Because a note is the highest form of debt. Okay, the government issued that note, and the government says or writes it. They promise that they will pay the bearer the sum of 1,000 rupee note. Now, some of you who want to defend everything, right, and defend even illogical economic moves, you guys will say that, you know what, government said that, okay, you come form a line in front of RBI or banks and then you can exchange this note. Is it written on this note that you can exchange? And do you think that time comes for free, that certainty comes for free, all that stuff? So long story short, what I'm trying to tell you is that we ourselves destroyed our debt market. There is no serious country in the world who will trust India's debt market, at least in the short term, right? It makes no sense. That why would you give Indian government some debt, right? Because even our notes can be banned. This is a fact. You can argue me on facts. Don't argue me on random political thoughts. This is a step that has happened, the demonetization, and it was a really bad move, right? So this is the situation on debt. Now, if we analyze the real estate use case, now think about it from this angle that in Dubai, for example, foreign investors are very excited to invest in Dubai real estate market. Okay, like bunch of people, including Indians, including like Britishers, etc. But have you met like Britishers or people from Nigeria or people from America coming and investing in Indian real estate market, especially non-NRIs? Okay, so I'm talking about Firangi, right? Investors, right? No. So NRIs, yes, maybe because they have lack of options, maybe, or whatever. But long story short, it's not as if that foreigners are lining up to invest in our real estate market. Why? Again, go back to the core. Hard to buy, non-transparent, no rules, bad laws, whatever, right? So this goes out. So there is no real use case of INR here. That if China government is holding or Chinese investors are holding a lot of INR, they can't really do anything with that. They cannot go to the debt market, real estate market. You'll say equity market, they can go. Yes, technically, but they go in the early stage market where the money is used to give exit to your foreign institutional investors. So they don't go in the publicly listed market, they go in the early stages. So this is an area where Indian equity finds some use. Okay, so this is there. Trade, I have already covered. Now, store of wealth. Now, store of wealth means what? That, for example, there is something called as stable coins, right? So, stable coins means that, for example, US government, or there is a company called as Circle, right? What it does is that it buys $1 US, right? Keeps it in a safe, and on the blockchain network, it releases $1 USDT. Now, someone in Kenya, right now, because Kenyan currency, it depreciates by 10, 15, 20% a year. It goes down like really, really fast. So what do? They say, you know what, like I'm sitting in Kenya with like whatever, my 100 units of money, scratching my head, by next year, this will, the buying power of this will be like only 80. What should I do? So if I have access to that blockchain, what I will do is that I will swap my whatever Kenyan currency I have into USDT, which is a representation of US dollar. Okay. So that is the concept of store of wealth. Now, a currency that depreciates fast, for example, INR typically goes down by 3-4% a year. Now, if a currency is falling down fast, that is a poor store of wealth. Now, INR has no use case when it comes to store of wealth. Even people in India are trembling a little bit that भाई INR में पैसा छोड़ दिया, इससे better है कि silver gold खरीद लो. Okay, so that is much better, and which is actually true, right? So I'm not denying that. So यहाँ पे भी नहीं है use case. Okay, what about remittance? Now, unfortunately, right, if your money, for example, if you're an NRI, you will understand this. If your money is in NRO account, or if you're a resident Indian trying to buy like US stocks, and if you interact with a bunch of Indian crook banks, okay, what do? They charge 2-3% on FX commissions. Not kidding. Okay, you try to exchange, you try to send like whatever $5,000 from Indian account, whichever bank you have an account with, into like US stocks, right, and put your money in brokerage there. They will charge or eat like 2%, 3% in remittance only. Okay, now that indicates that India is a very poor remittance market. So long story short, if you analyze the real use case of INR, it's very weak. Okay, so there is no structural demand for INR because our market is not that strong, right, structurally on these points. Now you will revert the argument. You might say that, okay, because we have like good tourism, we have a big NRI base, they will send money. So वहाँ पे तो है INR की value because NRIs, for example, I am in UAE. If I have to send money in India, I can't really put money in dollars. Okay, I have to mandatorily convert $1,000 or dirham, 1,000 dirham. If I'm giving it to my mom and dad in India, so I'll have to convert that into INR equivalent and give. So demand for money or demand for INR comes from NRI community. This is huge. Okay, so बहुत मजाक उड़ाते हैं लोग NRIs का and this that stuff, but honestly, they are big contributors as to why INR hasn't fallen much, right? Or it should have fallen a lot more. If NRIs were not there, That would have been really bad. Then comes the point that, okay, you were saying that INR typically goes down by 3 to 4% per year. But this year it has gone down by roughly like whatever, 6%. Now, why such a high decline? Now, something very interesting is happening. Okay, so up until this point, right, I mean, I would say all the way from 2015 to let's say 2024, RBI followed very strong interventionist policies. Interventionist policy means that RBI used to step in, and whenever INR used to fall quite a lot, RBI used to come and then they used to buy INR, right? Which means that they increased the demand for INR and sold US dollars, okay, from its forex accounts. Now, as a result, INR got kind of stabilized, okay. Now, in 2025, RBI ne haath khade kar diye, right? This is what they are doing, right, this year, that they are not going to do this, okay. So, they are not going to, or do it little bit less aggressively. And what they are saying is that, you know what, they are not really saying it, but this is the game that is being played out at the back end, that we will make it free float, right? Free float means ki let INR find its market level. So this free float thing is what we are doing with the currency. Then natural question comes that, okay, why was this not being done in this phase? Because officially our inflation always used to be like whatever, like 3 to 6% or even sometimes more. Right now, officially, our inflation says 1%. Okay, so RBI can actually afford to do this. Is 1% inflation a joke? 100% yes. If you believe that inflation is 1%, only God can help you, no one else. Please pray and enjoy life. Okay, so and stop watching like economics video, just watch like Palki Sharma or whatever and always be happy. So this is like stupidity at scale, right? Inflation is genuinely not like 1% or whatever, right? It is just madness. A lot of economists have questioned the data and rightly so. Nowhere in India inflation is like 1%. It makes no sense. Part 2 is that how does this impact you? So there are essentially 5 key points associated with this. So let me take you one by one. So the first key thing is that whenever INR falls, exports get competitive, which means that it becomes easier for us to export more. So then natural question comes that, okay, if exports are growing, if INR falls, it's a good thing, right? Then we can pretty much make like $1 is equal to 500 rupees. Export hi export hoga, right? I mean, you know, vikas hi vikas hoga, right? And all that stuff. No, it doesn't work that way, unfortunately. So why does export gets cheaper or more competitive? Because, for example, if I were sitting in, let's say, US and I was buying this pen for 100 rupees. Okay, so $1 could buy 100 rupees worth of pen. Okay, now suddenly INR falls more, it becomes like $1 becomes 150 rupees. So there has been a decline in INR because I can buy more of INR with my US dollar. So will I technically buy more of this pen? Yes, right? But what we miss in this equation is that, do I even need this pen to begin with? What if China is already supplying me this pen, a much more efficient version of this pen? So this is the point that we miss. But in the short term, yes, the fall of INR kind of helps increase our exports, provided our exports are competitive to begin with. Number 2 point, imports get expensive. For example, again, if $1 is equal to 100 rupees and if I am importing oil, for example, India is a net importer of oil. We import our energy needs, or we are rather a net importer of energy. Now our energy requirements are going up and up. Now, if our currency is getting weaker, then to buy that same 100 liters of oil, we'll have to now give more money. Okay, why? Because our INR gotten weaker. So this is the second key impact that happens, that imports become expensive. What does the first 2 aggregated points lead to? Well, it leads to higher inflation. So going forward, I am preparing my portfolio to deal with higher inflation in the India's economy. Okay. Now RBI has cut or will be cutting interest rates also. So this will skyrocket at least practical inflation in the economy. The made up number might look very, very different, but we'll have a very, very high inflation. I have been warning people this for the last several years now, right? That, okay, inflation in India is going to go haywire. So this is third key impact, right? Fourth key impact, that investments for NRIs become cheaper. So if you're an NRI who has saved in dirhams, US dollar, right? And suddenly there will be a euphoria that, you know, NRIs are buying like property. But what does that mean? It means that your rent is going to get more expensive. You'll be priced out of houses. It's already happening. Maybe in the next 5-7 years, you'll be priced out of really good or required products like education or quality education, because this escalates everything that NRIs avail. Many NRIs are coming back to India to plan their retirement and all that stuff. They will also send their kids to like schools or whatever, and there is jahan pe bhi, you know, prices can be escalated, it will go up. Okay, so yeah, so this is just 2022 to 2024 phase on steroids, right, where inflation actually de facto went up quite aggressively, and we saw like practical inflation go up, right? The cost of things going up like crazy. Then comes that what is it that you can do? So 5 key points that I'll leave you with. Number one thing is that invest only in high quality assets in India. Now, what does that mean? See guys, hota kya hai ki, I mean, when inflation is going up, for example, let me explain this by using the example of a house, right? So for example, all of us want to own a house. Now there is high quality housing and bad quality housing. If you are buying a high quality house, right? For example, 100 crore, 200 crore villa, luxury villas and all that stuff makes sense. Okay, why? Because who is demanding or where the net demand is going up? Well, it is going up for the top 1% or NRIs. Unki taraf se demand बढ़ रही है. The demand is not going up in bad quality stuff, right? No NRI or most of the NRIs are not coming back to buy like an average quality housing in tier 3 localities, okay? So when it comes to tier 2, tier 3 cities, you will see a massive erosion of buying power because NRIs typically do not come to these cities and all that stuff. I'm making assumptions here. I don't have data to back it up. So please consider this as an opinion, right? But what I'm simply trying to tell you is that try to own high quality stuff in India. It's completely okay. But do not make investments in bad quality products. Second key point, do risky investing. Now, what is the meaning of risky investing? See, example is that if you just put your money in FD, India is a horrid place for wealth preservation. You lose money, right? FD money, if you are depositing at 7%, net after tax, you'll make maybe like 5%. Okay, inflation in India is not 1%. You are not making net 4%. You are actually losing money if you put money in things like FD. I'm not saying that don't do any FD. Put little bit, whatever emergency you need. But you have to chase high risk investing. There is no other option. Okay, like it makes me sad to say this, but if you're putting your money in PF, EPF, EPPF, and whatever PF, it's not retirement planning. It's like systematic destruction of your retirement. That's what I'll simply say. Okay. I have a contrary opinion. It's okay. Like, I mean, all of us can have contrary opinions. Number 3, try to invest in US dollar at least 20, 30%, 40% of your income. If you can do it, wonderful. It's legal. It's not illegal. You can legally invest in US stocks. I'm putting a link in the description comment box. You guys can go check it out. I have written a detailed write-up how to invest, what the tax implications are, वगैरह वगैरह बातें. Please go read it and invest. Okay. This is 3. Because when you are investing, let's say $100 in Meta, that $100 stays $100, right? Even like if Meta is not going up, at least INR, US dollar wise, it's not getting corrected compared to INR. Okay. Number 4, invest in Indian companies that are export oriented. For example, IT business, I have been bullish. My community made money. I made very good money on it already. It has gone up by 10-15% since our buying price, right? Despite Indian markets performing really, really bad. Okay. 5th, do not invest in companies that are commodity prices driven. Why? Because if inflation is high and a lot of companies are importing, right, then it will hit their cost structure. So be a little bit careful there, that do not invest in companies that are dependent on commodity prices. Okay, so yeah, so these are 4-5 points, right? I hope that you enjoyed this video. If it did, do press the like button, subscribe to the channel, and I'll see you soon.